NVIDIA just reported another massive earnings quarter, and the numbers show that the AI infrastructure boom is still very strong. Total revenue came in at $82 billion, up 85% year-over-year and 20% from the previous quarter. That also marks NVIDIA's 14th straight quarter of sequential revenue growth. The biggest driver was data center. Revenue from that segment reached $75 billion, up 92% year-over-year. This was mainly driven by strong demand for NVIDIA's Blackwell architecture, which is being used by hyperscalers, AI cloud companies, enterprise customers, and sovereign AI projects around the world. But this quarter was not only about the headline numbers. NVIDIA also changed the way it reports its business, and that matters. The company is now separating its business into two major platforms: data center and edge computing. Inside data center, NVIDIA is now reporting two main subsegments. The first is hyperscale, which includes major public cloud companies and large consumer internet platforms. This segment generated $38 billion in revenue. The second is ACIE, which stands for AI Cloud, Industrial, and Enterprise. This includes AI cloud providers, sovereign AI infrastructure, industrial AI projects, and enterprise deployments. This segment generated $37 billion in revenue. This new reporting structure is important because NVIDIA is showing investors that demand is no longer coming only from a few giant cloud companies. The AI build-out is spreading into governments, enterprises, factories, regional AI cloud providers, robotics, and edge devices. In other words, NVIDIA wants the market to see it as more than a GPU supplier. It is positioning itself as a full AI infrastructure company. Another major theme from the call was agentic AI. NVIDIA said demand has gone parabolic because agentic AI has arrived. In simple terms, AI is moving beyond basic chatbots. It is starting to act more like a digital worker that can reason, use tools, complete tasks, and create economic value. That is important because agentic AI needs much more compute. A simple chatbot might answer one question, but an AI agent might search the web, write code, open documents, run calculations, create subagents, and keep working until the task is finished. More agent activity means more tokens, more inference, and more demand for AI infrastructure. This is also where NVIDIA's CPU story becomes very interesting. Most investors still think of NVIDIA mainly as a GPU company. But NVIDIA is now expanding deeper into CPUs with Vera, its new CPU platform designed for agentic AI. Management said Vera opens a new $200 billion market opportunity. They also said they have visibility to nearly $20 billion in total CPU revenue this year. That is important because Jensen Huang clarified that this $20 billion figure is for standalone CPU revenue. It is separate from Vera Rubin systems, where Vera CPUs are packaged together with Rubin GPUs. NVIDIA did not give a simple year-over-year CPU growth percentage, but the message was clear. CPUs could become a major new revenue stream for the company. The reason is that AI agents do not only need GPUs. GPUs handle the heavy thinking, inference, reasoning, and model execution. CPUs handle the surrounding workflow, including orchestration, memory, tool use, browser actions, search, storage, security, and coordination between agents and subagents. So GPUs provide the AI brainpower, while CPUs help manage what the AI is doing. NVIDIA also gave performance claims for Vera. The company said Vera can deliver up to 1.5 times faster performance per core, 2 times better performance per watt, and 4 times higher rack density compared with x86 alternatives. This shows how NVIDIA is trying to build the full AI computing stack: GPUs, CPUs, networking, software, systems, and full AI factory infrastructure. Blackwell is already ramping fast. Vera is designed for agentic AI. Rubin is the next major GPU platform, and Vera Rubin brings the CPU and GPU story together into one system. Another major highlight was free cash flow. NVIDIA generated $49 billion in free cash flow, up from $35 billion in the previous quarter. The company also increased its quarterly dividend from 1 cent to 25 cents per share and announced a new $80 billion share repurchase program. Looking ahead, NVIDIA guided for $91 billion in revenue next quarter, plus or minus 2%. That means management still expects strong sequential growth, mainly driven by data center demand. But there is one major risk investors need to watch: China. The US has eased some restrictions and cleared limited sales of NVIDIA's H200 chips to certain Chinese customers. At first glance, that sounds positive for NVIDIA, but the situation is still complicated. NVIDIA said it is not including any China data center compute revenue in its outlook. That is because actual shipments remain uncertain and Chinese import approvals are still unclear. At the same time, China is pushing companies to rely less on NVIDIA and more on domestic chipmakers. Chinese officials have reportedly questioned why local companies should buy NVIDIA chips when domestic alternatives are available. So even though the US has opened the door slightly, China may not fully walk through it. This matters because China used to be an important market for NVIDIA. But now, both US export controls and Chinese industrial policy are limiting the opportunity. So the China situation could become upside if the market reopens. But for now, NVIDIA is being cautious and leaving China data center compute revenue out of its forecast. The big takeaway is this: NVIDIA's business is still incredibly strong, but the story is changing. Revenue is growing fast. Data center demand is massive. Blackwell is ramping quickly. Free cash flow is rising. And NVIDIA is returning more money to shareholders through dividends and buybacks. At the same time, the company is becoming much more than a GPU business. The new reporting structure shows that demand is spreading beyond hyperscalers into AI cloud, enterprise, industrial, sovereign AI, robotics, and edge computing. The Vera CPU story shows that NVIDIA sees a major new opportunity in agentic AI. With nearly $20 billion of CPU revenue visibility this year and a $200 billion market opportunity, CPUs could become an important part of NVIDIA's next growth phase. But investors also need to remember the risks. Expectations are extremely high, competition is increasing, and geopolitical issues, especially around China, could limit part of the upside. So the question now is simple: can agentic AI keep driving this level of demand? And can NVIDIA stay ahead as competition and geopolitical pressure increase? For now, the numbers show that AI infrastructure demand is still extremely strong. This is not financial advice, but NVIDIA's latest earnings show that the company remains at the center of one of the biggest technology infrastructure shifts in the world. What do you think? Is NVIDIA still the best AI stock, or are expectations already too high? Let me know in the comments, and follow for more updates on AI, tech stocks, and the future of the market.